Ever notice how your uncle who flips houses acts like he discovered gravity, while your finance bro cousin swears index funds are the only legitimate path to wealth? They're both making money, they're both convinced the other's an idiot, and somehow you're stuck in the middle, wondering if you should buy a duplex or just dump everything into the S&P 500. Welcome to the weirdest turf war in personal finance. Imagine you've got $50,000 burning a hole in your bank account. You could buy a chunk of a rental property in some emerging neighborhood, become a landlord, deal with tenants who text you at 2 a.m. about broken toilets. Or you could click 3 buttons on your phone, buy into a total market index fund, and literally never think about it again until retirement. Both sides claim theirs is the obvious choice, both have data to back it up, and both think you're crazy for even considering the alternative. Here's where it gets interesting. Real estate investors will tell you about leverage, about how you can control a $300,000 asset with just $60,000 down. They'll talk about tax advantages, depreciation schedules, building equity while someone else pays your mortgage. They make it sound like printing money, like the cheat code to wealth that Wall Street doesn't want you to know about. Meanwhile, the index fund crowd is rolling their eyes so hard they can see their own portfolios growing. They've got charts showing how the stock market has returned an average of 10% annually for nearly a century. They'll remind you that real estate is illiquid, geographically concentrated, and requires actual work, that thing you're trying to escape by building passive income. But here's what neither side wants to admit. Real estate investing is basically running a small business disguised as passive income. You're screening tenants, managing maintenance, navigating local regulations, praying the neighborhood doesn't tank. The passive part only kicks in if you hire a property manager who'll eat 3 to 10% of your rental income and maybe, possibly, actually do their job. The index fund people have their own dirty secret though. That 10% average return, it includes some absolutely brutal years where you watch your portfolio drop 30 or 40% and you just have to sit there and take it. You can't call the stock market's landlord to fix anything. You can't negotiate with volatility. You just wait and hope the historical averages play out before you need the money for, living. Now imagine you're at a dinner party explaining your investment strategy. The real estate investor gets to tell stories about finding that diamond in the rough property, negotiating with motivated sellers, transforming neighborhoods. They've got narrative, drama, tangible wins. What's the index fund investor going to say? Yeah, I clicked buy on VTSAX and then I just waited. One of these makes you sound like an entrepreneur. The other makes you sound like you own a savings account with extra steps. Here's the thing about leverage that real estate people love to gloss over. Sure, you control a huge asset with a small down payment, but you also owe someone a massive pile of money. If the market dips 20%, your equity didn't just drop 20%. It potentially vanished entirely. You're leveraged on the way up, but you're also leveraged on the way down. And the bank doesn't care about your long-term thesis when the mortgage is due. The tax advantages are real though, almost absurdly so. Depreciation lets you claim losses on an asset that's probably appreciating. Mortgage interest is deductible. You can do 1031 exchanges to defer capital gains indefinitely. The tax code is practically begging you to buy real estate. Meanwhile, index fund investors are getting taxed on dividends and capital gains like regular schmucks unless they're hiding everything in retirement accounts. But let's talk about what happens when you need money. Your car dies, your kid needs braces, life happens. Index fund investor, sell some shares, money in your account in 3 days. Real estate investor, good luck liquidating a bathroom. You can't sell just the kitchen to cover an emergency. You're either refinancing, taking out a home equity line, or you're stuck. Here's where the real estate people puff up their chests again. But I'm getting monthly cash flow. Sure, if everything goes perfectly, if your tenant pays on time, if nothing breaks, if property taxes don't spike, if insurance doesn't double, that cash flow can evaporate faster than your enthusiasm for fixing a sewage backup at 7 a.m. on a Saturday. The index fund crowd counters with diversification. One fund gives you exposure to thousands of companies across every sector of the economy. Real estate investor, you're betting on one property in one neighborhood in one city. If that area goes downhill, you're toast. If a factory closes, if crime rises, if the schools tank, Your investment strategy is just hoping you're wrong about the trend. Yet somehow, real estate has this psychological weight that stock ownership doesn't. You can walk through your rental property, touch the walls, show people photos. It's yours in a way that owning 0.0001% of Apple just isn't. Humans are wired to trust things they can see and control, even if that control is mostly an illusion involving contractors who ghost you mid-renovation. The really wild part? Both strategies have minted millionaires, and both have bankrupted people who thought they knew what they were doing. The real estate crashes of 2008 prove that housing prices don't only go up. The dot-com bubble showed that stocks can stay irrational longer than you can stay solvent. There's no safe bet, just different flavors of risk dressed up as financial wisdom. Time commitment is the elephant in the room that real estate investors keep trying to hide behind tax forms. Finding properties takes time. Due diligence takes time. Closing takes time. Management takes time, even with a property manager. Index fund investing takes approximately 17 minutes per year, unless you're the kind of person who obsessively checks your balance and makes yourself miserable. Let's get absurd for a second. Real estate investing is like adopting a high-maintenance pet that pays rent. Index fund investing is like owning a very boring robot that slowly accumulates value while you sleep. One requires feeding and attention and occasional trips to the emergency room. The other just exists in the background, quietly compounding. The transaction costs tell their own story. Buying real estate means closing costs, inspections, appraisals, maybe 6% to realtors when you sell. You could blow $15,000 just getting in and out of a deal. Index funds, maybe a 0.03% expense ratio. The friction is so low, it's practically frictionless. Here's the weird cultural divide. Real estate investors see themselves as hustlers, operators, people who make things happen. Index fund investors see themselves as rational, efficient, intellectually honest. Both groups think the other is either working too hard or not working hard enough. Both groups are convinced their path is obviously superior. What nobody tells you is that the best investors often do both. They don't pick sides in some imaginary war between asset classes. They spread their bets, they balance liquidity with leverage, they use tax advantages wherever they exist. The richest people you've never heard of probably own index funds and real estate and businesses and who knows what else. The real question isn't which is better, it's which matches your life, your skills, your tolerance for chaos. Do you want to manage assets, or do you want assets to manage themselves? Can you handle a phone call about a burst pipe, or would you rather handle watching your portfolio swing wildly with market sentiment? There's no wrong answer, just different kinds of stress. And here's the kicker. While everyone argues about real estate versus index funds, inflation is quietly eroding cash, interest rates are doing their chaotic dance, and the actual path to wealth is probably just consistently investing in anything for decades without panicking. The vehicle matters less than the discipline of putting money to work and leaving it alone. So what's the move? Maybe you split the difference. Maybe you index fund your retirement accounts and save separately for a rental property. Maybe you go all in on one strategy and never look back. Maybe you realize this entire debate is just financial nerds arguing about the optimal route up the same mountain. That's the beautiful absurdity of modern investing. Everyone's got a system, everyone's got data, and everyone thinks their spreadsheet proves they're right. But the market doesn't care about your thesis. Real estate keeps generating millionaires and headaches. Index funds keep compounding and occasionally cratering. And somewhere, someone just getting started is Googling which path to take, about to fall down the same rabbit hole. The game never ends, the arguments never resolve, and your uncle is definitely going to bring up his rental properties at Thanksgiving again.